Welcome back. And in various announcements that the finance minister made in the previous week, agriculture is what we are talking about today. The Essential Commodities Act would be amended. The National Agriculture Law, APMC are some of the factors or some of the reforms which have been much needed by the agriculture, and COVID-19 perhaps has been an excuse of pushing them in for the sector here. Simon George, president of Cargill India, joins us now to talk further about that. Simon, hi, good to have you. What would you say with the kind of scenario that we are in right now? How do you look at the industry? How do you read into the finance minister's reforms into the agriculture? And how do you look at the future of food and agriculture during the COVID and post-COVID?
Okay, see, let's put it this way. The COVID has brought us into unprecedented global health challenge. Now, this has actually affected many industries in different ways. And when we talk about agri and food per se, I would talk about in terms of both demand and supply, the two dimensions in which if you look at it. What the COVID will do is that, there could be a time that is required to build the consumer confidence building will take time, and therefore the demand might take a little time. But what is critical at this perspective is to keep the supply part going stable. Now, why I'm saying that is, we are a country where a large amount of population basically depends upon agriculture and food sector. And what we don't want to have is a food crisis in an already existing health crisis and an economic crisis. And that could mean a terrible thing for our country. So far, we've been doing pretty well in our country in terms of the food supply chain. Okay. And we need to see how we need to keep building this up, because that's going to be the most difficult thing as we go forward.
Absolutely. So, Simon, that clearly absolutely is the question on what is the trade looking like right now in country and outside as well, because we do understand that some of the global trade is now picking up within China, with US, etc. So when it comes to Cargill, you yourself, what has been the supply chain like, and how are you managing, interstate labor? How have you been dealing with all of those concerns?
Sure. See, let's understand one thing. In this point of time, the most important thing that we all need to realize is the free trade that needs to take place across the globe. And even a country like us, what tends to happen is that if we have to remove as many barriers as possible, specifically in the food and agri sector, because the cost escalation that could happen, even a reduction of a tariff that is required in case of bringing costs down, specifically at this period of time, is what we need to look at from a larger perspective. Now, having said that, you also seen that there has been a slew of measures that the government has announced last week, which is, to us, it looks to be one of those landmark changes that a country could go through. We saw that in 1991 when we were in crisis and what the government did then. And I think the present government has taken this opportunity of specifically the COVID situation to really reform agriculture. I think it's a great move by the government.
Simon, I have one final quick question, and this really is on supply and demand scenario post-COVID. How do you look at the rest of 2020 and beyond panning out? Do you see life changing a lot when it comes to agriculture, or do you think it really is about plugging the holes that we have known about and this being an excuse?
So there are two parts of the agri and food. One is the basic commodities, and then what is called the food processing. So what you see is the commodity will continue to have its demand from what we see. There could be, you saw India's production has been pretty good from a wheat perspective, and we hope to have a good rice too. Therefore, from a cereal perspective, India is quite strong in terms of its, but more important is the consumer confidence in terms of the processed food. That might take a couple of quarters to really get back to the shape that what we used to have before.
All right. Simon, thank you very much for joining in and giving us some perspective on some of these agriculture measures that we've heard of in the last few sessions. Well, on that note, it's time to come back to the equity market. And the big news today, of course, has been the fourth equity fund infusion in Jio Platforms, the fourth big deal. And it's a big investor. We're talking General Atlantic. My colleague Nisha Poddar is joining in with all the numbers and the analysis. So more people in queue to get a slice of Jio Platforms, Nisha?
That's right. It looks like it that after Facebook, remember the management had indicated that this is just 50% of the total investments that we are likely to get. So 43,000 crore rupees was from Facebook. Then we have reached at this point the aggregated amount of about 67,000 crore rupees with General Atlantic, Facebook, Silver Lake as well as Vista. So one may assume that there are more talks happening, and reports do suggest that some of the Middle Eastern funds are also in talks with Reliance Industries for buying out more stake in Jio Platforms. But first to the marquee private equity investor, General Atlantic, which has an expertise across many tech investments, makes its largest Asia investment by buying out 1.34% stake in Jio Platforms for close to 6,600 crore rupees. Now, looking at the overall fund raising picture by Reliance Industries, which is aiming for a debt-free company by the end of, remember, calendar year 2020. That's what the management had indicated in its last press conference. So that's what they are aiming for, and they've already reached a target of fundraising of 1,27,000 odd crore rupees with rights issue, BP investments, and these 4 stake sales coming in. So looking at the overall picture, it gives more impetus when it comes to the rights issue prospects, which is going to launch on May 20th for Reliance Industries. Debt reduction, debt-free company looks a little more better with more investments flowing into Reliance Industries and its tech subsidiaries. And on the other hand, remember that the pressure on the Aramco deal has been lifted, so it gives more time for Reliance Industries to negotiate, and that particular transaction is at a due diligence stage right now. And fourth, another important aspect is that Jio Platforms or any of the subsidiaries of Reliance Jio could be heading for an initial public offering in times to come, and this also gives a higher valuation perspective to that, because General Atlantic deal puts its equity valuation at 4.91 lakh crore rupees.
All right, Nisha, thanks very much for that. So that's interesting. I mean, a big round of fundraisers from Jio Platforms, from Reliance over the last couple of weeks now. Well, here is a word from market experts, Shankar Sharma, who we spoke to over the weekend, his analysis and prognosis on the economy and markets from here.
We have Reliance in our portfolio, so we like it. I think it's a transformation going away from an old economy business to I think it is a little bit more than just a telecom company. And people say that it's still a telecom company. Yes, telecom is there, but if you put the entire other pieces that Reliance has built, which is the retail, online retail and the offline retail, and all that, linking the Kirana stores and all that into a larger play, then I think there is something that hopefully can morph into a pretty decent size stock bet. So we like it. I mean, that's the short answer to the question.
Reliance is now one of our bigger holdings. I was going to say before that, the problem with our market relative to, say, US is that we don't have very clear absolute winners out of this crisis. So for instance, to put it in perspective, say you can say US may have Amazon or a Netflix or Zoom or some gaming company or some delivery company. We, if we have that at all, would be Reliance and Bharti maybe. Reliance, we own it for the last few months only after the first transaction.
All right, so that's a view from a couple of market veterans. Now, we need to take a quick break. As we do that, here's just a reminder. This is something that all our viewers must, of course, take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special series and a special campaign called Informed Investor that empowers you to make the right decisions with your money. Now, if you invest in the stock market, you'd probably know about contract notes. This is a legal record of all the transactions carried out on your account in a trading day. While you may trust your broker to transact on your behalf, do insist on obtaining contract notes, bills and ledgers within 24 hours of any transaction. Take time out to verify the transactions with your broker. You may also verify trades on the NSE website.
Check your eligibility for SBI's pre-approved